Good afternoon and welcome to the overview of the proposed merger between Brand Architects and InnovaDer presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. Due to the ongoing nature of the proposed merger, the company will only be answering pre-submitted questions in today's session. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, subject to legal guidance. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Quentin Hyam, CEO of Brand Architects. Good afternoon to you, sir.
Good afternoon, Alexandro. Good afternoon, everybody. Thank you for joining the call. I'm just going to go through the various disclaimers. So my name's Quentin Hyam, for those that we haven't met. I'm the CEO of Brand Architects. We will be joined by Tom Carter, who's the CFO, who's not here. Tom, do you want to say hello?
Afternoon, everyone.
And I'm also delighted that Blake Hughes, the CEO of InnovaDer, is beside me here.
Hello, everyone.
So, for those that don't know Brand Architects, I thought it'd be useful to give you a quick overview of our business. So we are a quoted British beauty challenger brand. We run an outsourced operation, which basically means that, in particular, we use third-party contract manufacturers. We are led by insight-led brand development, so we focus on understanding data. We support and promote an omni-channel route to market. So that means that not only do we encourage brands to be sold in bricks and mortar, whether it's the high street or the grocers, whether that's domestic or international, but also we believe that we should have a presence through e-com, so the likes of Amazon or Look Fantastic, and also D2C. As a business, we are looking to create noise and buzz, and if we were to summarize it, our sort of vision is exceeding expectations of everyday beauty. On the right-hand side, you can see the brands that we have within our portfolio. So there are 13 brands. The ones at the top are the female brands, which is a large percentage of our business, and then the male brands in the bottom right-hand corner. And we also have a new D2C marketplace called the Unexpected Store. So very quickly, just to give you an overview of what the brands are, we have Superfacialist, which is the balance of natural ingredients with science. That is our largest and fastest growing brand. It has a true omni-channel distribution, so in the likes of Boots, Sainsbury's, Waitrose, Morrison's, Look Fantastic. And we're delighted that it's going to be rolling out to 200 to 500 Tesco stores in June, July. Our second biggest brand is Dirty Works. Dirty Works is a pampering-led proposition with the emphasis on fragrance and fun, and that participates in bath and body, accessories, skincare, and we have a very strong Christmas gifting portfolio. The third brand you'll see is The Solution. The Solution is basically skinification of the body. So we use skincare, facial skincare ingredients, but addressing body issues. They're all three female brands. On the bottom, you'll see three male brands. So the first one is Fish. Fish is a hairstyling proposition which originated from a famous salon or barber salon in Soho. The second brand is a joint venture with Jamie Stevens, which is a hair care brand that addresses men's thinning or disguise issues. And then we have the Real Shave Company, which is a value proposition focusing on shave and post skincare. We also have 7 brands that we relaunched over September, October of last year. So from the top, you'll see Scent Spa. That is a licensed brand with the world famous spa down in the New Forest called Scent Spa. We have Root Perfect, which is a value proposition addressing hair colorant needs. Utopia is an accessories brand, which you'll find in Sainsbury's. And then on the bottom, you've got the relaunch Happy Naturals. Happy Naturals is a fun targeting a younger consumer. It is 97% natural and it's in hair care and bath and body. We then have Argan, which is relaunched. It's a strong Waitrose brand, and that has skincare, washing and bathing, and hair care. The third brand is called Dr. Salts. Dr. Salts is basically providing wellness solutions using the power of Epsom salts, both within a salt format and a shower gel format. And then finally, we have a brand called Kind Natured, which is also 97% natural, and that's in hair care, bath and body, and foot care. Blake, over to you.
Hello, everyone. For those who don't know the InnovaDer portfolio, I thought I'd spend just a couple of minutes explaining our portfolio of brands. So firstly, InnovaDer is a UK-listed company that has 4 key brands: Skinny Tan, Roots, Double Effect, Charles & Lee, and Nothing, which are sold at a variety of retailers across the UK, US, and Australia. Our principal focus as a company is in direct-to-consumer and e-commerce, though we also do have a major part of our business in the pharmacy sector. So again, the omni-channel approach that Quentin's been mentioning previously is something that we very much see as well. So in terms of our brands, Skinny Tan is 84-85% of our total business. This is a skincare-led tanning brand. The tagline is "Love your skin, love your tan." But behind that, what you have is that it's an always cruelty-free, vegan-friendly, and made with natural ingredients. Many of these are now relatively commonplace in the market, but historically, we were one of the first brands to get there within the tanning sector, and this has been the foundations on which this strong brand has been built. Roots Double Effect is a female and male hair care brand, which focuses on the power of naturally derived Procopil to reduce hair loss and promote stronger, thicker hair. The Double Effect reflects the hair loss reduction, but equally enabling you to achieve the hair styling and condition needs that you would like. The third brand is Charles & Lee, which is our no-nonsense, high-performance Aussie-made male grooming brand. Sold predominantly today in Australia, but now ready for global expansion. This brand is sold predominantly through department stores in Australia, where it ranks a strong third behind Clarins and Clinique in the male skincare and grooming sector, which again, we believe shows the potential for this brand to go much further afield. And last but not least is Nothing. It is our hair removal brand, female hair removal brand, that focuses on delivering a smell that's like nothing else in a category that is historically had many consumer issues and is not a particularly nice experience. This brand aims to turn those challenges on its head and deliver outstanding results, but also with a great in-use experience. So those 4 brands are the key brands from InnovaDer. I'll now hand back to Quentin. Oh, actually, no. Oh, no, I won't. Quentin and the guys have asked me just to say a few words to begin with about why the InnovaDer board has recommended the merger, and why we think that together we will be stronger. Ultimately, there's 4 key reasons, and those 4 key reasons have been there since our first conversations with Quentin and the team, and we believe that will deliver value for all stakeholders. Firstly, the combined group will have a significantly bigger scale. Those scales enable us to reduce the overall central costs that aren't aimed at driving consumer demand. So ultimately, we believe will lead to investment to accelerate future growth. Secondly, there's very much a complementary competencies. This is both in terms of our brands, but also our distribution and also expertise. Our expertise in e-commerce is complemented by the international expertise from Brand Architekts, but also their greater focus on the grocers, which is something that the InnovaDer business hasn't had historically. The third is strong financial foundations. This both enables future M&A and future growth, but also in a world full of global uncertainty at the moment, will enable the combined businesses to sail more serenely going forward. And finally, and this is probably the biggest one, it's all about growth acceleration. Together, we think both businesses are stronger together, and ultimately that should enable both halves of the business to accelerate their growth further, both in existing distribution, but also in a broader e-commerce marketplace. Over to you, Quentin.
Thank you.
So now we're going to talk about the financial benefits of the merger. So if I start in the top left-hand side of this slide, we look first of all at our pro forma revenue. So this is based on both businesses, their year end for the 12 months, June 2021. So both businesses have the same year end. Based on that, InnovaDer to June 2021 delivered 10.2 million in revenue, and Brand Architects delivered 15.9 million. So on a pro forma basis, you'll see that the businesses would deliver then 26.1 million, which is a group of greater scale, but also a great step forward in terms of our strategy to become a 50 million revenue business as part of our Project 50 plan. So if I go down then to cost synergies, clearly by bringing the two businesses together, there is a duplication of PLC costs and also operating costs that we should be able to eliminate through our integration plan, which will be great for the profitability of the business, but also opportunities to invest. So you'll see the breakdown here, but we see a range of somewhere between 1.5 to 1.75 million as being the cost synergies that can be achieved. And we look to put our actions in place over the 12 months following completion to achieve that. And that would then be the amount that of cost synergies we would generate on a run rate basis. Then if I go back up the top in terms of, again, pro forma, this time adjusted EBITDA or operating profit to June 2021. So InnovaDer had a 1.5 million loss in that period, Brand Architects 0.2 million, so combined would be 1.7 million loss. But you'll see then that by achieving those synergies on a 12-month run rate basis would go a great way to bringing both businesses as a combined group back to profitability on a pro forma basis. Now, if we go down to share price accretion down the bottom, so this looks at the InnovaDer share price at the time of the scheme document being published. The market price at the market close the night before was 31p. And what it looks at is the combined value of both the cash and the paper consideration of the Brand Architects shares that would be delivered versus one InnovaDer share. The equivalent value would be 35.6 pence, which would be a double digit or 15% share price accretion versus the InnovaDer closing value. Back up the top in terms of net cash, this is to our half year results, so to as at the 31st of December 2021. InnovaDer had net cash just above a break even there at 0.1. Brand Architects, you'll see, obviously brings a very healthy balance sheet and net cash balance. So as a total, then the group will have a strong balance sheet, which positions it very, very well for investment in both M&A, digital marketing, and general growth acceleration. And then down the bottom, in terms of voting commitments. So this year, voting commitments as a percentage of the total share capital of both businesses. So both boards recommend this merger to their respective shareholders and have elected to commit their beneficial holdings to vote in favour of the deal. Now, from a InnovaDer perspective, that represents 23.1%, and from Brand Architects, that's 18.3%, including a letter of support from key shareholder Octopus Investments.
Thanks, Tom. So just to confirm the transaction overview, the strategic benefits are that we think that we know both boards are unanimously recommending this, as Tom has outlined. The merger consideration is part share and cash. So IDP shareholders will receive 0.3818 of BAR shares and 7p cash. So that will equate to 38.7% of the combined group, whereas BA will have 61.3% of the combined group. So we believe that bringing together the two businesses, we have a portfolio of sustainable and challenger brands. We have a digital first mindset, and we share similar values, which are passion, collaboration, agility, and innovation. So the strategic benefits of bringing together the two businesses will address scale. So we'll have far greater scale. And as Tom outlined, it's 26.1 million on a pro forma basis. It will have complementary sales and marketing competencies, and this will enable us to have enhanced scale, which will be very beneficial to address some of the global uncertainties we're facing with regards to post-COVID and also the cost of living crisis. So we'll have an enhanced product portfolio that addresses multiple consumer touch points. We'll have an enlarged customer base, which both will benefit from both online and offline. And also we can capitalize on our BA's international footprint. More importantly, we'll also be able to accelerate our standalone growth strategies, leveraging BA's strong net cash position. So as Tom outlined, we believe that there's between 1.5 and 1.75 million of cost synergies, but also there's an exciting opportunity for revenue synergies, which will come from combining the digital expertise of InnovaDer and Brand Architekts, bricks and mortar, both domestic and international footprint. So the timeline is that subject to shareholder approval, and completion will be expected by the end of May. Just a bit further detail. So if we look at the strategic benefits, we believe that the increased scale of the group will really enable us to deliver our mission of achieving a 50 million business. So we do believe in an omni-channel approach, and InnovaDer has got an extremely strong D2C footprint with Skinny Tan, which we think we can leverage to accelerate not only Brand Architekts brands, but also our new marketplace called The Unexpected. We believe that the net cash position will help accelerate brand development and new product development, and also provide more M&A opportunities. And we anticipate that for the future that this will be a double-digit earnings accretive model. So the revenue synergies is principally there's twofold. So the Unexpected store, which is Brand Architekts' D2C marketplace, can benefit from Skinny Tan's CRM, but also Skinny Tan can benefit from Brand Architekts' UK and international reach. So in particular, our relationships with grocers and multiple international distributors. In the long term, we'll be looking to leverage InnovaDer's D2C footprint in America and Australia, whether that's through the Unexpected store or through Brand Architekts' broad portfolio of brands. Also, we would want to capitalize on both businesses who are seeing strong growth in Amazon. So we look to continue that development UK and internationally. So cost synergies, I think we've mentioned, but over time, this will enable us to have a streamlined operating model, which will generate strong EBITDA, which will then enable us to over-invest in our strategic pillars. The combined group has a strong channel mix. So with bringing on board InnovaDer's D2C footprint, as well as Brand Architekts' high street and grocer footprint, we're covering an omni-channel approach. We'll have a very strong balance sheet, as Tom outlined earlier. And also, by bringing the two businesses together, we'll have a more balanced revenue split. So Brand Architekts is always stronger in quarter one, in half one, where we have the sales uplift from Christmas gift, whereas InnovaDer has a much stronger H2, because that reflects the seasonality of Self-Tan. So going forward, we believe that bringing these two together will enable the brands to have greater scale, greater international diversification, and still allow us to have investment for M&A. So the business going forward will have a strong net cash position. And as I mentioned earlier, we can look to accelerate NPD, broaden the Unexpected, whilst also allowing us to have more M&A. This chart shows the combined group attributes, a number of them we've already mentioned. So hopefully it'll give you an idea of the scale of the business. So we are covering multiple categories. We're covering a very broad consumer base, both male, female, and different demographic generations. We'll have a broad customer relationship. So whether that's the in the UK, high street, the grocers, and international through either direct to retailer or through distributors. But also, more importantly, we'll now have a strong D2C footprint. We have a broad number of brands, so there'll be 18 brands in total. We think that the two businesses have a lot of synergies in terms of cultural fit and ways of working. And I think the financials are there to see. So it's a much stronger business that addresses some of the subscale issues that we have independently. So this is what the combined portfolio would look like. So there's 18 brands in total, plus the unexpected store. Our purpose as a combined business will be to exceed expectations of everyday beauty. So what we mean by that is that we want to provide something above and beyond what they'd normally expect. Our goal is to take the combined group and achieve 50 million net sales in 5 years. And that's what we internally refer to as Project 50. We have 4 strategic pillars which will underpin everything that we do as a combined group. So the first is brand development. So that's ongoing investment in new product development. It's always been cognizant of productivity. It'll be the continued investment in M&A. And also with the greater scale of the group, we can invest and support more in advertising and promotions, in particular behind Skinny Tan, Super Facialist and Dirty Works. The second pillar we refer to as brand reach. That really is about distribution. So we do believe in an omni-channel approach. So wherever the consumer wants to shop, when she wants to shop, how she wants to shop, we will continue to do that. So that will be both domestically and internationally, bricks and mortar, e-com, as well as D2C. The third pillar is, it refers to ESG, but in many ways, in our category, it's about sustainability. So that's the use of post-consumer recycled packaging or plastics. We use FSC, so Forest Stewardship Certified cards, a recycled card. It's really important for our consumer that we do as much as we can from an environment perspective, but also from an ingredients that we look to source and use sustainable ingredients. And the fourth pillar is a sort of a cultural direction where we want the business to be a challenger, use that challenger maverick mindset, but to do things in an unexpected way. And that's our long-term vision. So the values we mentioned earlier are about collaborating, passion, agility, so the ability to speed a response, flight of foot, and finally innovation.
So this slide talks to what happens next following completion. So up the top, clearly we then focus on integration, harmonization of both the businesses. So we get our priorities straight as part of a 100-day plan, define the merged operating model, and then transition both organizations using a meritocratic process within that to deliver a streamlined organization. Then moving around to the right, clearly a key focus of that as well would be delivering the cost synergies and all the benefits that could bring to eliminating the duplication of costs. Down the bottom, exploring and developing revenue opportunities, as we've said, in particular in relation to Skinny Tan distribution, both domestically and internationally, and also the expertise from AnnovaDer D2C and what that can bring to BA's own D2C operations. We haven't quantified this, but obviously we're very hopeful of all that this can bring and see great opportunity within this area. So really putting those together in terms of the cost synergies, the benefits from that, and the revenue opportunities and the strong balance sheet, this gives us great scope for investment not only in new product development and innovation, in brand advertising and promotion, and of course, marketing online and also the platform itself. So we're really excited about all the opportunities that this merged and combined group can deliver. So if I come next to the new board structure, so clearly we have 2 boards coming together. There can only be 1 board for the merged business. So it's the belief of both boards that the retention broadly of the Brand Architects board serves the purposes of the combined group the best. However, Simon Piper will come across from InnovaDer to bring business continuity and the expertise from that side into the combined business board, and Edward Beale will retire as a non-executive director following the announcement of our preliminary results for the period FY21-22. So in terms of timelines, the key thing that happens next really are the shareholder approval meetings. So there's an InnovaDer court meeting and also shareholder meetings for both InnovaDer and Brand Architects, and they are both happening on the 19th of May. Now, clearly there are votes on those meetings, so for those voting by proxy, there is a deadline 48 hours before, so we kindly draw the attention of shareholders to those dates. So the meetings are on the 19th, but the 17th of May, 48 hours before the meetings, is the deadline to get votes by proxy in. Following that, successful votes, then there will be a court sanction hearing on the 27th of May, and then an expected completion date based on that timetable of the 31st of May. Following that, then the completion point, clearly the businesses will then focus on the integration. So as we've said, it's a 12-month integration period, but we will hone in on the priorities as part of a 100-day integration plan, move forward in terms of the first phase of cost synergies, most notably PLC duplication costs, and then also in turn, as part of the combined group, focus on the areas where we can deliver the best return on investment as part of our investment priorities review.
So in summary, both boards are recommending to shareholders to vote in favour of the forthcoming shareholder meetings. There are irrevocable commitments from both boards, as Tom outlined earlier. The financial benefits, we believe, will deliver between 1.5 and 1.75 in cost synergies, as well as significant revenue synergies going forward. We believe that the enhanced scale of the combined group will be beneficial to offset global uncertainty with regards to consumer confidence and spending post-COVID-19. The combined group will have a very strong balance sheet, so that will enable us to leverage further growth opportunities, whether that's complementary M&A or investment in digital marketing or the continuation of brand and product development. And more importantly, there will be the continuation of the acceleration of both our growth strategies. So both BA and IDB boards believe that the merger will accelerate our previous standalone growth strategies. So in order to make us hit the Project 50 goal in 5 years' time. So that takes us up to the end of the presentation. So we do have a number of questions. So I'm going to just look at the questions first. Just give me a second. So the first question is actually for me. So it's, what attracted Brand Architects to merge with InnovaDer? So we were always attracted by their strong D2C skill sets. So their reputation and experience in developing D2C is something that's highly attractive. We think that both Brand Architects and InnovaDer have common cultures and shared values. Both companies are focused on building sustainable brands with a digital-first mindset. So we think there's clear, strong synergies that exist that will enable us to grow or accelerate the growth of both businesses. The next question is for Blake, which is, what attracted InnovaDer to merge with Brand Architects?
Thanks, Quentin. I guess, not surprisingly, there's certain similarities to some of the stuff that Quentin's just shared, but fundamentally that both businesses will be stronger together was at the heart of why we believe from an early stage that this was the right partnership for InnovaDer. Ultimately, that stronger together will translate itself into enabling growth acceleration, which is what I think we all ultimately want to get to. We believe that the emerged Brand Architects and InnovaDer business will, as Quentin said, will have similar values. I think very important when you put businesses together that the values work together. We'll have a portfolio of complementary brands. I mean, really, our brands dovetail together very nicely in terms of the categories and their positionings, but also in terms of their go-to-market models as well. That for me, these core skills in the go-to-market model resource will be key enablers of accelerating future growth. So overall, really, when we looked at the two businesses and put them together, the synergies and the complementary opportunities seemed very clear.
Thanks, Blake. The next question is, what are the main strategic benefits of the deal? So the main benefits and business are as follows. We think that establishing a combined group of greater scale will enable us to have a much stronger balance sheet so we can leverage further growth opportunities. We can increase our international expansion, in particular on Skinny Tan. We can accelerate both companies' standalone growth strategies. We believe that the benefit of Skinny Tan's CRM will enable the unexpected store to grow, and combining the group will offer a wide range of products to our combined commercial customer base. The next question is, Tom, I think this is probably best for you. What are the expected financial benefits of the deal?
Yes, so the quantified financial benefits of the deal are expected to result in recurring run rate pre-tax cost synergies. We give a range between 1.5 to 1.75 million. What we don't quantify, but what we allude to, obviously, are revenue opportunities that we'll also be pursuing as part of the combined group.
Tom, if you're able to, clarify, what are the drivers for these benefits?
Yes, so the drivers for those are both the harmonization of the supply chain and the D2C business relationships and the staff costs, and as we discussed before, also the elimination of duplication of predominantly PLC costs and also other operating expenses.
Tom, what will be the combined group financials?
Yes, I think we set this out in the previous slides, but on a pro forma basis, from a P&L perspective to the 30th of June, the combined group would deliver 26.1 million and adjusted EBITDA of negative 1.7 before obviously applying the cost synergies. And on a net cash basis, this is at the 31st of December 2021, the combined group would have a healthy balance sheet, enjoying net cash of 17.4 million.
Thank you. I'll answer the next question. Do you envisage any revenue opportunities? And we've touched on them, but we believe that there'll be significant revenue synergies driven by, firstly, InnovaDer's digital client base will help Brand Architects' unexpected store grow, but also conversely, Brand Architects' relationship with bricks and mortar retailers, in particular the grocers within the UK, but also Dirty Works are sold in 34 countries internationally, so we'd look to piggyback on that. We believe that there'll be revenue synergies from combining the group's brand portfolio, so there'll be the opportunity of cross-selling. So Skinny Tan and Super Facialist have very similar consumer demographics. We believe that the combined group can benefit from resource and efforts into new product development. We think there's opportunities of expanding key brands into Australia and America. And also we can utilize, or Brand Architects will utilize, InnovaDer's digital marketing expertise to help bolster awareness of all brands within the combined group. So there's two more questions. Blake, that's for you to answer.
Sure.
So why is the merger consideration much more weighted towards shares in the merged entity rather than cash?
I think, put simply, we believe that this will enable the InnovaDer shareholders to best participate in the future growth opportunities of the merged business. the InnovaDer directors believe, we as a group believe that the greater scale will not only bring operational benefits, but potentially also enhance trading liquidity of the combined group shares, and will ultimately bring a greater appeal to a wider range of investors. So ultimately, those two sections, allowing our shareholders to participate in the future growth, but then ultimately also being part of a larger group with a larger liquidity of trading opportunities, we think will be a benefit to our shareholders moving forward.
Thank you. The last question was, Crichton's attempted to acquire InnovaDer at a similar valuation last year without success. Why did the InnovaDer board accept the Brand Architekts proposal?
Ultimately, the InnovaDer directors believe that the BAR merger offered benefits for all stakeholders and that both companies will be strong together. I know I've said it before, but ultimately when we looked at the combinations of the two businesses, we could sort of see the strength of them coming together. It's apparent that InnovaDer growth can be further accelerated by the incremental resources and investments of the larger group. As they've mentioned, Brand Architekts with a net cash at 31st December of over 17 million. And we as directors believe that the merger offers both the opportunity and the resource to accelerate this growth. So ultimately, when we combine that growth, but also with the greater financial resilience in the face of the current unusually high level of global uncertainty, we believe that this is the right offer at the right time.
Thank you, Blake. That's it for questions we've had submitted. As Alexander said earlier, if there are any other questions, you can submit them. We'll try and look to answer them after this session.
Quentin, Blake, Thomas, thank you very much for your presentation and thanks for addressing those pre-submitted questions. Perhaps just before redirecting investors to provide you with their feedback, which I know is particularly important to the company. Quentin, could I just ask you for a few closing comments?
Yeah, sure. Firstly, I'd like to thank Blake for coming to our office. Hopefully that highlights the united approach or belief of both boards. So we think this is a fantastic opportunity to bring together two businesses, which, whereas the sum will be greater than the parts. So we're very excited about it. We think it addresses scale. We have a very strong and broad portfolio addressing numerous price points, numerous consumers. We still maintain a very strong balance sheet, so we can continue to invest through M&A into MPD and AMP. And this is the beginning of our journey to achieve Project 50, which is a 50 million net sales business within 5 years. So thank you very much for listening. Hopefully we've answered your questions, but we're very happy to answer any more that you submit on this forum.
Quentin, Blake, Thomas, thanks once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of Brand Architekts Group PLC, we'd like to thank you for attending today's presentation and good afternoon to you all.